So I really wanted to make this video just because something that I see so many people struggle with is understanding market conditions. When is it a high probability day and when is it maybe a little bit of a lower probability day? And today I think was just a perfect example of a low probability trading day. Like you can see a good setup, but it still doesn't play out because market conditions are not in your favor. And the way that I go about understanding which days are going to be good and which days are going to be bad, it doesn't even start on the chart. Like the first thing that I saw going into today is you go over to Forex Factory, looking at the news that we had. Today I see it's a no news Monday, so we don't have any red folder high impact news. Going into tomorrow, it's Veterans Day, so it's a bank holiday. I personally don't trade bank holidays. I know some people that do. I've gotten clapped in the past trying to trade bank holidays, so I just take those off. It's usually because I trade a higher momentum strategy. I'm looking for continuations, and on bank holidays we tend to range a little bit more. It's more so reversals or a little bit choppier, so I just kind of stay away from it. So I'm already expecting, because Monday doesn't have any high impact news. Tuesday's a bank holiday, so I know those 2 days are going to be slow. And then going into Wednesday, we also don't have any high impact news. We have a bunch of FOMC speakers, but no red folder that I really think is going to bring a lot of volatility into the market. Now, on Thursday and Friday, Thursday we have CPI, high impact USD red folder, and then Friday we have PPI as well. So those Thursday and Friday are days that I'm expecting to bring some volume into the market. So if I'm expecting Thursday and Friday to be those higher probability, higher volume days, Monday, Tuesday, and Wednesday, with one of those days being a bank holiday, I'm probably going to expect a little bit slower price action because price is going to want to wait for that high impact news to really make those big moves. So looking at the news calendar is super, super, super important. Now, actually, like looking at the chart, so this is what pre-market looks like right here. This is on the 5-minute time frame. If we go to the 15-minute time frame, we have no clear direction of where price wants to go. Price is going up, down, up, down, up, down, up, down. And something that has really helped me when it comes to being stuck in a range, I don't like if the 4 hours ranging, if the 1 hour is ranging, like I'm still cautious, but if I see displacement with the lower time frame, I will still look for a trade. But if the 5-minute or the 15-minute is ranging, just do not click the button, bro. Like do not click it. You have to wait for a clean break out of that range in order to even start looking for a trade. Because if we're chopping up like this on the 15-minute, the 5-minute is going to look even worse, and the 1 minute is going to look even worse than that. And you're not going to find a high probability trade in here, at least if you're trading continuations, which is the way I trade. I need to see a clear path and clear momentum towards a draw on liquidity for me to even start looking for an entry. So do not trade in a range. Now, the other thing, if we go to the 1 hour time frame, we opened up price like right about here. We are in a huge 1 hour bearish fair value gap. And me personally, I don't take trades in high time frame gaps. Like I'll take trades to the downside if we're in a bearish gap because, I hope price respects that gap, but I have to wait and see, are we going to respect that gap or are we just going to continue cutting through it? So there's no way, like the only bullish draw on liquidity I would have today would be this, not that high. It'd be this high right here. That's the only possible bullish draw I can have. But in order for me to target this draw, we have to completely cut through this gap right here. And the chance that we're going to cut almost 400 points, like it's very low probability. So already going into the day, I even told my Discord, I can't really target higher because we're in this giant gap right here. Like I have no idea what we want to do. So that's also like I see a lot of people taking, like there was actually a decent setup like going on the 5-minute chart. When we first opened up price, we expanded up pretty heavily. It was a pretty strong move up, and I saw a lot of people. It was actually on ES. That's what a lot of people took it on. So we had the same exact draw on ES, and then price came down into this 5-minute gap right here. Hate the magnet sometimes. And then if we look at the 1-minute time frame, when we came into this gap, we respected it pretty efficiently, right? Like I saw a lot of people take something that looked like this right here. And in hindsight, like that looks like a pretty decent trade. But due to market conditions, that price is going to be slower. It's not going to deliver as efficiently to the draw and liquidity. Like if this was a good day with good high impact news, this trade would probably play out. But because it's a no news Monday, tomorrow's a bank holiday, we're in a big 1 hour gap, like it just lowers the probability and it keeps lowering it the more things you bring into it. And in this case, going back to that gap, we hadn't closed past this 1 hour gap. Like I don't consider us to respect or disrespect a gap until we actually close past that gap. Because the wicks, that's just kind of, it doesn't tell the full story. A candle closure is what's actually going to tell you, are we respecting the gap and are we not? And that's super important to understand. Now, the last thing that I'll say is, to be honest, we didn't really have any great draws on liquidity because this high up here, I don't expect us to just rip through this fair value gap during the New York Open. That's going to take quite a bit of time if we even do rip through it. It looks like we're respecting it now to the downside, so I can't really target higher. The only draws that you could really use, I mean, this low on the 1 hour is, it's pretty mid, to be honest with you. Like on a day like this, I probably wouldn't even use it unless it was just completely obvious that we were going to that draw. Like really the only draw that's high probability would be filling this new week opening gap. But once again, we opened up 25,550-ish. It's 300 points down. Like I don't expect on a no news Monday for us to dump 300 points down. And if we were to dump down, once again, I'd still have to see us cut through this 1 hour fair value gap. And it's just, we don't expect that to happen on a no news Monday. Really, any day, I don't expect the market to move 300 points during New York Open session. It doesn't happen that often. But when it does, which are days like Friday or Thursday and Friday, when we have that high impact red folder news, those are the days I'm looking to capitalize on. A lot of people will trade days like today and they'll lose money. They'll lose their capital. And then when the good setups come on days like this Thursday and Friday, they don't have the capital nor the confidence in order to risk heavy on those good setups. And it fucks them in the long run. And that's a big problem that I had coming up in my trading journey. I would burn capital on low probability days. So when the high probability setups came, I wouldn't take it. I would hesitate. I didn't have enough money to take the setups. It was terrible. So understanding market conditions is so huge, because if you took a loss on this trade right here today, like if you're on eval, it's kind of whatever. But if you're on XFA and you're taking a trade in this range right here, like it's a pattern trade. My trading model, as you guys know, I look for a strong draw on liquidity. I want to retrace into a fair value gap and catch the move up to target that strong draw on liquidity. And in hindsight, we come down and we respect this 5 minute right here and we get displacement out of it. In hindsight, that looks like my entry model, and it is my entry model. But because of the market conditions today, that trade would not have played out. And I hope if you were in this trade and you saw us just doing this chop, whatever, I hope you at least got out at your break-even price, because that at least saved you from a loss today. But yeah, I think this is just a super important topic to talk about. I think the main key things from this are, look at the news. If it's a no news Monday or a day before a bank holiday, just be a little bit more cautious, especially if we have high impact red folder news later in the week. Do not trade when we're in a 5-minute range or a 15-minute range. That will save you so many losses. And lastly, do not trade when we're in those high time frame gaps. Don't trade in the direction to where we need to chop through that whole gap to target the draw and liquidity, because more than likely we're going to do something like we did today and come into that gap, chop around for a little bit, and then eventually displace out of it. So that's really all I have. If you took that loss today, watch this video back, journal it. But yeah, that's about it.